the equities world, as liquid and transparent as we are, we do not give up who the traders are unless they choose to, right? So that is a really, really important part of the entire making the markets as liquid and as transparent as they are. So there's obviously instant price discovery and all of that. There's depth of book, all of that. But if you choose to put your name behind a quote, you can, but most choose to be anonymous, even on the quote, even on the order. But then on the trade, you think about the level of privacy that institutional investors seek. It is pretty extreme. I mean, their only obligation is to disclose their positions 45 days after the end of the quarter. So while I think that should be brought up closer to the trade, I don't think it should be revealed at the trade. I think you would disincentivize so much volume from coming in if they have to give up their strategies on a real-time basis. And so I think if you end up in an open blockchain that does not have privacy, there will be a privacy layer that's introduced, and that just creates friction. So if you have it built into the actual blockchain technology, that's the elegant way to make it so that you retain the need for them to be able to execute their strategies successfully throughout the day without a give up. And then the other thing I would say that we also have to consider on the post-trade side is moving to instant settlement sounds amazing, and it definitely takes an enormous amount of risk out of the system in one respect. You don't have the overnight risk. And Billy, we used to run, as you know, a treasuries trading platform, and there is overnight risk that we had to take on, and it can be pretty extreme in market with different market conditions. So kind of relinquishing that overnight risk is important, but netting is absolutely critical for the well-functioning of the equities markets. There's just too much money flowing through the system in any given day to have gross settlement. So having a functioning netting capability, which I don't think we've necessarily solved that yet for equities, just given the scale of the markets, it has to be able to net, and you have to be able to have privacy. And then the last thing is, as we know with some of the derivatives markets that we've seen in the crypto space, and we run a clearinghouse in Europe, making sure that you're managing default risk successfully, and managing the positions and understanding the risks that are embedded in the clearing of these trades is really, really important. And when you don't have that, you see the ADL structures, which would not